Hello and welcome to my next NAP. NAP stands for Nonprofit Auditor Points, and I'm Irina Orishkova. And I designed these NAPs to help nonprofit community to understand accounting rules better and hopefully to answer some of your questions. Today we continue the series about revenue recognition. So if you missed the previous two NAPs where we talked about overall revenue recognition for nonprofits, please do check them out. But in the last episode, we talked about exchange transactions, which is earned revenue under Standard 606. And we identified that revenue is recognized when nonprofit delivers services or goods, when the performance obligation is met. Today, we're moving to the second type of revenue in nonprofits, and we're going to talk about contributions. For nonprofits, contributions usually larger and more complicated revenue. And as we discussed in the previous NAP, exchange transaction under 606, it acts very similar, not similar, it's the same as for profit. Contribution, it's unique standard for nonprofits and it's more complex. And we discussed before, and I want to confirm that non-contributions in non-reciprocal transfer of resources, meaning entity that sends money to a nonprofit receive no or nominal value in exchange, maybe just recognition, some sort, or thank you letter. So let me explain what it means. It means that the donor gives something and they do not receive equal value in return because the donor wants to support overall mission of the organization. They're not buying products, they're not buying services, they're not purchasing anything for themselves. They just give money and allow nonprofit to do what they do. Examples of contributions, it's individual donations, foundational grants, corporate gifts, bequests, fundraising proceeds during the events, most private grants, many government grants. And from accounting perspective, the term contribution includes what most people call grants, but it also can be called gift, donations, bequest, pledges, promises. That's all falls under contributions. So I'm going to use term contributions. Maybe sometimes I will exchange for other terms, but all of that is the contributions. So when somebody within your organization says, we receive a grant, it does not mean that it's truly a grant or contribution. You still need to analyze it. You need to read the substance of the agreement and determine which bucket it falls, exchange transaction or truly contribution. Is it truly non-reciprocal? Or it's actually exchange transactions as disguised under name of grant. There can be money received from the same government entity, but one agreement will be actual exchange transaction and another agreement would be actually non-reciprocal contribution. But once you determine if something is a contribution, that you know that you need to follow standard 958. And that's where a lot of nonprofits get confused because revenue recognition under 958 is quite complicated. Contributions revenue is not recognized when the cash received. It's recognized, and it's a key 2 words. Please remember, it's recognized when unconditional promise was made. So when the donor made unconditional promise, you need to determine if it truly was unconditional promise. Again, it's nothing to do with cash and nothing to do with the signed grant agreement. We need to analyze document and see if that agreement does really represents unconditional promise. So if a foundation sends a signed award letter committing $300,000 over 3 years to a nonprofit and makes this promise unconditional, nonprofit might need to recognize the full amount, $300,000, as a revenue as soon as that award letter was received. The cash will be coming over $100,000 each year moving forward, but revenue needs to be recognized in the full amount as soon as that award was received. Again, if it's an unconditional promise. So now, before we're gonna go deeper on the promises and the condition, which we will do then in the next episodes, I wanna stay and look in the big picture today. There are 3 major questions you may ask to evaluate contributions. So first, is the contribution or exchange transaction? Second of all, is it conditional or it's unconditional? And third, is it restricted or without restrictions? So as we discussed before, a defining feature of the contribution is that the donor does not receive any similar value in exchange. Again, the donor might get some recognition, maybe some naming rights or announcement in the event, but they are nominal. The most important that the donor does not receive any goods or services in exchange. Let me give you a couple examples. For example, if somebody donates $1,000 to support youth program in a nonprofit and receive thank you letter, that's a definitely contribution. There is nothing in exchange the donor received. So it means the nonprofit needs to recognize revenue as soon as the nonprofit received a letter with the $1,000. If the corporation sponsors your gala and receives its logo display in event, that's usually still a contribution unless there is really big marketing benefit, which is significant enough to represent exchange in value. But if it's really not, it's just really marketing, fair market value of representing this logo does not equal to the sponsorship that a corporation provided, then it's just really also contribution. If a foundation gives a grant to support a general mission of the nonprofit, it's a contribution. So now let's talk about why distinctions matter so much. Contributions accounting is different from exchange accounting in one very important way. You may not recognize revenue on delivering service. This is irrelevant. When the service is delivered on the contributions, it's irrelevant. You recognize in revenue as soon as nonprofit receives the right to that donation, and that's typically when nonprofit receive unconditional promise. The services might be provided later on these funds. It does not matter. The right comes from a promise. So as soon as nonprofit receive the promise, that triggers revenue recognition. But the promise needs to be evaluated carefully. The promise must be unconditional. As we said, contributions are unconditional promises to give. So some promises come conditional. So not all promises made the same. Some of them are conditional and some of them are not truly promises. They just intend to give money. That's why contribution-based accounting is almost feels very subjective. And it's more complicated than exchange revenue recognition, because in exchange transaction 606, it's pretty objective. You see nonprofit provided services or goods, exchange happened, revenue recognition triggered. In contributions, it's not that obvious. There might be some judgment involved. So you have to read the agreement carefully. You have to evaluate language of the agreement, and you have to understand the donor intent. And you have to separate accounting rules from internal budgeting decisions. So your internal budgeting, how you're planning to spend this money, should not affect any revenue recognition idea, because everything should only come from a donor. As I mentioned before, contributions revenue often makes up majority of nonprofit funding. Nonprofits are supported primarily by various contributions. And if your organization relies heavily on donations and grants, then understanding of 958 revenue recognition for contribution is very critical, because it will affect how revenue appears in your financial statements, and you will understand why your nonprofit might have some surplus and why a nonprofit might have some deficits. It might be because of the multi-year grants, and they might affect financial results. So when you talk to the donors, to your community, you can explain what the numbers mean. Besides everything, it will also affect your receivables and how you present restricted revenue versus non-restricted and net assets. Especially if your nonprofit is supported by multi-year grant, your financials might be really confusing if you don't understand the revenue recognition for contributions. Because if the nonprofits receive substantial amount in multi-year grant, then you recognize revenue when it was promised in 1 year, but you actually delivering services and doing work in future years. So your future years might have some deficits, and this first year might look like you receive a lot of money. So you can, without understanding revenue recognition, you will say we will have an amazing year 1 and then not so good year 2 and 3. But indeed, they all need to be looked together, because it's continuation of spending money on the same grant that was given you in the year number 1. So over the next few episodes, we're going to slow down, and we will unpack the very important discussions. We will talk about what constitutes a promise, what makes promise unconditional versus conditional promise, what barriers on a promise means, how multi-year grants are recorded, and how restrictions on the donations are affected overall revenue recognition and classification on financial statements. So the key takeaway from today's nap is that a contributions in non-reciprocal transfer, meaning the entity that gives funds to nonprofit does not receive equal value in exchange. And it is recognized when it's unconditionally promised. Again, 2 important words: unconditional promise. Sometimes it can be some judgment involved when you're reading the contribution letter to understand, was it unconditional promise or not? And before you recognize revenue, you cannot simply rely on labels on top of the agreement. If it says grant, it does not mean it's a grant. If it says a contract implies exchange transaction, you cannot assume it's a contract. You cannot rely on assumptions. You can only rely on the substance. You need to read the agreement in full and understand whether it's exchange transaction or it's a contribution where not truly exchange took place and the donor did not receive same value of service or goods in exchange. Again, in the next episode, we will go deeper in what exactly qualifies as a promise to give? And what is distinction between a real commitment or simple donor intent? And what do we do with the intent if it's not truly commitment? Thank you so much. Hopefully you enjoyed the snap, and I'm looking forward to see you next time. Have a wonderful day.